Hi again, this is Rick with AmazingAccuracy.com. Today is May 27, 2016. It's currently 11:35 a.m. And that's Chicago time, by the way. What I wanted to do in this video is I wanted to kind of share some basics in taking advantage of these cycle envelope charts that we provide our members within the F-Dates market forecasting membership. And these are Hearst type cycle envelope charts in that they help anticipate um, what the short-term future direction of prices could look like based on the historical data. So it uses some pretty sophisticated math to look at the waveform, the cycle pattern leading up to the last bar that you see on the chart, such as right here in the British pound. And based on this pattern here, the cycle pattern, it anticipates when the next turn in the market will likely occur. And this is quite useful because you wouldn't use it as a standalone forecasting tool. Well, at least I wouldn't. Some might do that, and some actually have found it quite reliable and valuable in itself, but I wouldn't do that. But I would use it in conjunction with other methods, crossover max, hitting resistance around this time, for example, F-date, weekly turn that is due at this time, things like that. We have various methods for forecasting market turns within the membership. And so it would be coupled with this pattern here and anticipating when the market is likely to turn. And since trading is part market timing, it's so that we can minimize the risk exposure, keeping our stop loss as close to the market action as possible without getting prematurely stopped out, and thus leaving the opportunity open for more profits with less exposed risk, is all about market timing. And we won't talk about all the other things that go into that, of course, which is risk management, money management, psychological aspects of trading, so forth and so on, so on, and so on. Okay, so with that being said, we take a look at this chart, for example, here, and it's anticipating that we are near a time where the British pound should likely start to move down again, because it's just kind of the pattern that it has been doing leading up to that. And again, it doesn't necessarily mean that it will happen. It's just that the probability is on the high side. And again, I couple that with other things. So here's what I wanted to point out, though. When you see a pattern like, let's go back to this area here, where you see that a market moving up has a tendency of, when it's pulling back, not to go below the previous swing bottom, and then start moving higher, pulling back again, but not moving below the previous swing bottom, and then going higher, and so forth. Especially when the market has just previously made a higher swing than the previous swing, then it makes it even more likely for that to continue until maybe let's say a swing top. Let's say this swing top were to happen here. Rather than above this top here, it happens right here, which is below this horizon up here. Then, that would increase the potential for the market to then also go lower than the last swing bottom low, which is right here. Okay, and in the even little bit longer term, could be lower than here, since this would be kind of a more significant swing if it was following this pattern here. If it was below here, then we can likely see it go below here. But usually, like when the market is kind of projecting that it's going to be moving higher, which is kind of we're anticipating right now with the blue outer cycle envelope there, that we'd be looking for any kind of correction here not to go below here for this pattern to continue. Then we come over, let's say, for example, the Canadian dollar here. Now this one here is an oddball because you see the green line is flatlining, even though the blue is kind of projecting that we could see higher Canadian. The shorter term cycle envelope is flatlining. This doesn't provide me really with any useful information on the very short term. So it would be one that I really wouldn't, put much stock in, and I would just kind of move on. Here's the situation. Notice that the euro has moved now below the previous cycle swing bottom here. And it's anticipating, based on this pattern, that we could soon be looking for it to rally up. Well, in light of the fact that it moved below this low here, I would anticipate that any rally we got going on the upside in the euro is highly likely then to have some kind of correction, maybe what we see here with the short term, and that it would occur prior to this high here. In other words, it would have to likely occur somewhere in this area here, because that would be below here. And this is how you would anticipate market direction, and then you again would want to couple that with other forecasting indicators that you're using, or within our membership, for example, the F dates. Again, here the Japanese yen, same thing. You'll notice that we still have this pattern where prices, when they go higher and then they pull back, we can see that it doesn't pull back below the previous swing bottom. We can anticipate then some kind of bottoming here, and then for it to continue up as it has. Then it did it again here. We can see that that did not go below here. So the trend is still on the up. It's anticipating here that we could be looking at it rising up. I would anticipate that for as long as this is holding above here. Everything is off the table, of course, if this low is taken out. And so in this case here, if I happen to have other indications that this is a good probability for the market to start rallying again, then I would definitely put a higher emphasis on the long side in this market, as long as we continue with this kind of a pattern. And this is how this helps me to time which direction the market is most likely going to go in. And again, that's what's so useful of using these cycle envelope charts as one of the tools in the toolbox for timing trades. Now here's a real good one in coffee, for example. And you'll notice here that in coffee, when prices made a bottom here and it rose, initially we would have expected, for example, for a cycle top to occur anywhere here that is below this top. And if it had started doing that, then we would anticipate that we would be going lower than here. It's all a matter of this so-called trend pattern of lower swing tops and lower swing bottoms. But because prices in coffee had exceeded the previous swing top high here, now that we have this pullback, we anticipate, based on the cycle envelope pattern we see here, that the swing bottom will be above this bottom here, because now we're looking at higher swing top, higher swing bottom, higher swing top, so forth, for this new direction. This helps us here in that now that we have this extreme pullback, our risk is lower on the buy side than if we had tried to buy it here, for example, or 50% here. Now we're down here around 62%, close maybe 70. I'm just kind of looking at it with my eyes. I'm not actually applying a retracement on here. But I would be anticipating that we would likely bottom above here. And that's because of prices having gone higher than here. And this is again is why this is so useful in helping us time our short-term trades in these markets utilizing the cycle envelopes. And if I happen to also note that I've got a MACD cross-up, or maybe I note that we're in oversold territory using our overbought oversold indicator in the provisions charting software, or we have the we have the F dates weekly due or daily turn due and so forth. Then I would be looking on the buy side here based on all this information. And so it really does help to keep us on the right side of the trades. Very, very valuable tool the cycle envelope charting is, and I just can't see any F-date market timer not utilizing this as part of their market timing for trades. Now this here is just basically showing us the trend is still up in sugar. If we get any kind of a pullback, like it's anticipating that we should get one sometime soon here, I would anticipate that any pullback we got would not, of course, go below here before it first had some kind of a rally. So it gives us that kind of information. However, because of this move up, I don't anticipate trying to catch a bottom right here or right here so much as if these swings were a little bit more like this here, which then keeps the risk parameters lower because you don't have these very long type run-ups where you can have a multiple of corrective moves on the downside. It's just a different profile altogether. And so here's cotton, for example, same thing. We see that as the market moved up and made a higher swing top here compared to here, it did make it compared to here, but in the very short term here, that any kind of a pullback you might anticipate, for example, that it would be higher than here and so forth. But we're not looking at this back here. This is already way hindsight, so it's really not a good example to show. But we can see, if you'll note here, for example, that cotton could possibly exceed this swing top here, and if it does, then this anticipated pullback we would expect would pull back no further than here before we had a follow-up rally to it. Whether that rally would go higher than this previous top is another thing, but we would expect some kind of a rally prior to it ever going back down to here, and that's all if this market makes the next turn higher than here. So you'd have that stair-step pattern. Same thing with crude oil, you have this stair-step pattern. So we continue any pullbacks that we get, as long as it's continually making these higher swing tops, any pullback we would expect is likely going to make a higher swing bottom, and we would want to time that with our other indications. Okay, I think I've provided enough information as far as the cycle envelopes are concerned, and if you happen to be a member of the F-Dates Market Timing membership, if you have a question about this, please post it in the discussion forum, and I will get back to you and elaborate on any point that you need elaborating on. And if you're not, and you're watching this, for example, on YouTube, you certainly can drop me an email, and I'll try to get back to you as soon as possible. And I'll see you in the next video. Thanks for watching.